Welcome to the Robert Hunt Financial Market Update. It's your host, Robert Hunt, where I look at the week's financial news that can be a bit confusing, misleading, and take you off course and help to make it actionable, understandable, and clear. Happy post-election week. What a week. What a show. So much to parse through. Per your request, we hear you loud and clear. The audience wants to talk about the implications of the election. We shall do so. We're actually going to look at a interesting bet that was made in a previous election on the movement of markets and discern what we can learn from it. We also have two Wall Street Journal articles we're going to dig into. One, headline, "The Republican Tax Cut Gamble is About to Pay Off." And the next Wall Street Journal article, "Wall Street Salivates Over a New Trump Boom." The boom. So it appears, as of the time of this recording, that not only has Donald Trump won the presidency, but the Republican Party has captured the Senate and the House. And so we're going to look at, does that matter? Why does that matter? And then why did the stock market go up so much? So second day after the election, and it still keeps going up. So at the top, I thought this was a great way to kind of keep us sober-minded amidst what potentially could be a moment of euphoria. This is on Twitter. Nick Maggiulini, there was a firm called Jane Street that built a system to get the 2016 election results minutes ahead of the mainstream media. Can you imagine if you had that data? Minutes is plenty of time to place a trade. So a gentleman named Sam Bankman-Fried, remember that name? He was at FTX, was convicted of fraud. I believe he's in jail. When he was at Jane Street Capital, he built a system to get the 2016 U.S. presidential election results before any mainstream media outlets. Wow. Bankman-Fried and a team of analysts, each who worked on a specific state, were able to obtain the state-level results of the 2016 election minutes before they were public. By the way, listener, this is happening in every market. Anywhere there's a market, there is going to be someone seeking an information advantage, which is why it is so hard, but certainly it's possible to get an information advantage in any market. This is an information advantage in election markets, but they happen in grain markets and stock markets and bond markets and gold, whatever. Everyone's looking for an edge. But check this out. However, despite learning of a pending Trump victory, this is 2016, minutes before everyone else, Jane Street lost money on the trade. They bet against U.S. markets. They shorted the market. And initially, I don't know if you can go back in time, 2016, Trump, find out Trump's winning, markets tank. Absolutely tank. So their short position, where they were betting the stock market would go lower, looked like it made money initially. However, as the night went on, the market rally ensued. So Michael Lewis, the famed author, talks about these events in Going Infinite. This is a book he had. He says this: what had been a $300 million profit for Jane Street was now a $300 million loss. It went from single most profitable to single worst trade in Jane Street history. Okay. So there was an information advantage that was had. This is one of the hardest parts about this. You earn an information advantage. In this instance, Sam Bankman-Fried and his team at Jane Street, they actually earned an information advantage. They did the hard work. They rolled up their sleeves. They found alpha, that risk-adjusted return. Then, hey, it doesn't stop there, though. Then they had to make their bet. Which way will the market go? They bet a Trump victory is a down market. Okay, that is a huge bet with a ton of risk. They obviously put a bunch of money up. They lost the firm $300 million, not to mention all the hours and effort on the bet. So if it ever enters your mind, oh, gee whiz, I just wish I could know what would happen in the future. And I've talked about this on previous podcasts with knowing the headlines of the newspaper. If I just had an information advantage, boy, wouldn't that be swell. And what I think we can see really from this instance is it may not go well. In fact, the perception of an information advantage may be the most dangerous thing that can happen to you. Some of the riskiest trades that occur that I see are when people are sure of something, they're so confident, and it just isn't so. I would much rather have someone who, despite feeling like they have some sort of information advantage, knows in the back of their mind it may not materialize to profitability. So for you as an investor, for me as an investor, I want us to be comfortable not having an information advantage. This goes back to our philosophy: cost low investing, simple time horizon long. We don't need an information advantage. There's a great example that even with an information advantage, you can still lose a ton of money because you may just have deceived yourself into thinking your information advantage was profitable when it certainly was not. So in this instance, 2 days after the Trump victory, the stock market is up. And it's up quite a bit. I believe it was the 5th best day in the U.S. stock market by market capitalization increase. I believe that's Wednesday. That's the 5th best. Now, part of that's because the stock market's so much bigger than it was, but still the 5th best, not percentage, market cap increase, meaning the actual dollars added in value to the market. 5th best day in the history of the market on that Wednesday. So Richard Rubin in Wall Street Journal writes this article: "The Republican tax cut gamble is about to pay off. Tuesday's results will help the GOP extend expiring tax cuts." So this was and is significant. Had Vice President Kamala Harris won the presidency and fulfilled her commitments for taxes would have gone up a lot. There were talks of an unrealized capital gains tax, which I didn't think would probably happen, but at least the saber rattling occurred. Certainly saber rattling related to the estate tax being decreased. What is a big deal is not just the Trump presidency, but the House and the Senate, it appears, will be in Republican hands. Therefore, it looks like tax cuts will be extended. This article explains it. A lot of these, the article says they set the bulk of those tax cuts to expire after 8 years at the end of 2025. Teeing up next year's debate and gambling that a future Congress would extend them. Okay, that bet's paying off. So back in the day, they made this bet that, hey, we'll be able to extend them. They did. So there's a quote here by Rohit Kumar: "Dramatic tax increases are off the table." Rohit Kumar, a former Senate GOP aide, now at accounting from PwC. The idea that the corporate tax rate is going to 28 or even 25 no longer seems like a real thing. U.S. stocks, as I mentioned, climbed Wednesday on hopes for deregulation and dissipating fears of tax hikes. And what makes it even more clear, Stephen Moore, longtime occasional advisor to Trump, said that extending the 2017 Trump tax cuts will be an A1 priority for the new administration, meaning we're not raising taxes. And, I don't know how much you want to make this bet, but if you're talking with your estate planner and you're trying to make moves, pressure's off. A lot of the expirations that were to occur will almost assuredly be extended, at least at their current level, potentially even higher on the estate tax. So, why would the stock market go up so much? Well, the article has a couple theories. One is just the simple reduction in income taxes. So this is we can enter into the RHF classroom here and say, what gives a stock its worth? How do we define the worth of a stock? And there are a whole host of ways people do it, but the simplest form is its future cash flows discounted to the present value. Meaning, if we think Coca-Cola is going to earn a certain amount of money in the future, we're going to discount those future cash flows back to the present and arrive at a present value. So when you assume that those future cash flows will be taxed at a certain rate, and that rate is then lowered, that makes the entity more valuable, all things being equal. So it could be that just the simple fact that tax cuts will either be maintained or furthered, that could just be it. Those future cash flows now are going to be less encumbered by the federal government, meaning more money in your pocket, meaning those stocks are worth more to you, the investor. That's a very simple way of looking at it. There are a whole host of other variables that could occur, but sometimes we like simple explanations, don't we? I certainly do. So this article goes into, what happens if the Democrats do, in fact, get the House? Well, of course, many of these things would be more difficult and in play. But for you, an investor, just know that I wouldn't have advised any changes anyway. But certainly we can at least go back and say stocks are up for the simple reason that more cash will probably be in my pocket. and would have otherwise been in my pocket. And then another article I want us to look at, Wall Street Journal. Wall Street salivates over a new Trump boom. I think Trump would love that article. A new Trump boom. So this article discusses a little bit more of the mergers and acquisitions that are now available with this new Trump boom. So there's certainly the idea that, hey, with tax cuts, you get more money in your pocket. But it's also true if there's a lighter hand on regulation, that a lot of companies are worth more. So something interesting happened with the small cap index the moment that it was discovered that Trump won. Something I'll almost say peculiar. It went up a whole lot. Well, these smaller companies benefit from less regulation and a more favorable mergers and acquisitions environment. They can be bought out for more. Moreover, a bunch of these banks went up a lot. So this article by Gregory Zuckerman, Lauren Thomas, Anna Marie Androids, and Jack Pitcher. It's a lot of journalists. They talk about the KBW Bank Index rising 11%. They're thinking regulatory scrutiny will ease with Trump. A lot of mergers have been thwarted by the current administration. And investor Carl Icahn said that's going to change. A little more freedom in the markets. And then, as I mentioned, the Russell 2000 Index, which is made of these small companies, it rose 5.8% in a day. That's bizarre. You almost never see that. Well, this is a little bit of a trade deal. Michael O'Rourke, who's a chief market strategist at Jones Trading, says this: there's an expectation of economic policy pivoting inwardly for domestic growth, thus benefiting small caps through broader growth. Well, that's one of those we'll see. I mean, possibly. Certainly, I know that's what Trump says he'll do, is tariff, which would in fact help domestic companies more. We'll see. Of course, we don't know. Be very wary of anything like this getting in your mind and making you think it's forever. There are some folks, Dan Eveson, PIMCO's chief investment officer, warns inflation remains above central bank targets, and the Fed has said they will remain diligent in the inflation fight. What's he saying? Before you get on the Trump choo-choo train and just put all your money on green, if inflation cranks up because of some of this stuff, which it's very well could, buckle up. That means the Fed's going to be raising rates. That brings in a whole host of challenges for you as an investor. What's really nice about being an index fund investor is you're good. You're covered. Whenever articles like this start slicing and dicing, small caps did this, mid caps did this, large caps did this, you don't really need to worry about it. Even if you only own the S&P 500, you don't really need to worry about it. This is just one day. It's especially a non-event if you own the total market index, VTI, the Vanguard Total International. Sorry, Vanguard Total, VTI, Vanguard Total Stock Market Index. You own everything. You own it all. Now, I will say tangentially, it was the case that international stocks tanked on the Trump victory because he's the tariff man. Wouldn't you know it, they pop right back up today. So we can't put too much trust in markets. We just don't know in the short term. This is the article that talks about the U.S. stock's largest one-day gains in market cap. It was November 6, 2024. And they show the four others. Again, not percentage, but it just shows the increase. So can you imagine the stress? And I've heard this a lot. Hey, I'm going to wait this one out. I'm going to sit in cash, kind of let this election figure itself out before I invest again. Have you ever heard that? I certainly have. I hear it regularly. Hey, it's just there's enough in the air right now. Let me go to cash. Let me sit and wait this thing out. When the dust clears, I'll invest. Well, how do you think that person's doing today? Unfortunately, what I think they're doing today is they're just putting in a buy order in their market timers and they don't know it. Just to give you a picture of how that sit on the sidelines and see how it goes thing is, in the last 6 months, the U.S. stock market's up 15%. In the last 3 months, it's up 15.2%. In the last 1 month, it's up 5%. In the last 1 week, the U.S. stock market's up 4.3%. And the last day, it's up 0.56%. In the last year, the U.S. stock market's up 36.5%. So can you imagine telling yourself and others, hey, look, I'm just going to hang out here. No point in pushing it. I'm going to wait for the uncertainty election, and then I'll invest. Because what's true is even if your candidate didn't win, you still need to invest. You still can't just hang out and wait on the sidelines and hope for the best. I mean, a market timer by any other name, but still a market timer. So we've got to get out of the market timing game. If you have done that, don't beat yourself up. Just click the button and be done with it and promise never to play the game again. Market timing is a brutal game. It just doesn't. We don't do a good job as humans of actually winning the game. It's a bunch of work and a few winners. So if you were keeping your costs low, investing simple, and time horizon long, you're all good. You did the hard work on the front end. Way to go. And I want to close with wisdom from Morgan Housel. I think in the midst of a news cycle like this week and an election like we had, to get whipped up into a bit of a frenzy, like, whoa, people are really bullish and they want to go and put money in. And I think, hey, I get it, but let's go back to some of the tried and truisms of investing that Mr. Housel, I'm pulling this from a podcast he did. I will hopefully link it. It's called the Knowledge Project Podcast. And they had Housel on. He has some great things in here I want to say. He says, I think not having FOMO, the fear of missing out, is the single most important financial skill. Wow. He says, I think it's so important that you cannot ever imagine accumulating significant wealth over your lifetime if you are susceptible to FOMO. Wow. FOMO's hard. Another thing, he says, my investing strategy is to own index funds for as long as I possibly can, to be an average for an above average period of time. He'd fit in so well here. Pull up a chair, Mr. Housel. The water's warm. You'd love it here. And this is one of my favorite lines. To be average for an above average period of time. That's hard. Another line he says, investing is one of the very few endeavors in life where the harder you try, the worse you're probably going to do. Oh, I love that. This one's contrary to the math, but I think it's important to say. He says, nothing that we've ever done in our financial life has, I think, given us more happiness than paying that mortgage off. Now, Mr. Housel's definitely Mr. Dollars and cents and numbers and spreadsheets. So he's giving you something qualitative about his personal finances that in his mind, even though if the stock market's up 36% in the past year or whatever, it certainly would have been better to borrow as much as you could and invest. But he's telling you, no. Nothing we've ever done has given us more happiness than paying that mortgage off. Morgan Housel, one of the best. And I just know, if he were here on this podcast, he'd join us in saying, despite whatever election results are, despite whatever the short-term movements in the stock market are, we're going to focus on what we can focus on. That's keeping our costs low, our investing simple, and our time horizon long. Because that's what's going to give us the best shot on our investing journey. Until next time.